All right, now the top story tonight on the show is about India's headline retail inflation, the CPI. The CPI for India has eased. It's gone down to 6.71% in July. This is as per the data released by the government, and the inflation in the month of June, if you recall, was 7.01%. Also, food price inflation. For July, the CPI food price inflation stands at 6.75%. That too has gone down from a month earlier. It was at 7.75%. But now, of course, as far as month-on-month trajectory of inflation is concerned, we are seeing the 7th straight month where inflation remains above the RBI's tolerance level, which is, of course, 6%. The government hoping to ease now as far as oil prices are concerned. They are hoping that these oil prices and the kind of steps they've taken in recent times will bring the inflation down further, at least soon enough in the weeks to come. So what's the possibility of that? Looking at this data to discuss the state of the economy, the retail and food inflation, the course of the markets in response to the kind of macro data that we are seeing right now. Let's connect with our panel of experts. ET Now's consulting editor, Mythili Bhusnurm is joining us. So is independent market expert, Mahantesh Sabarad, and former Secretary of the Ministry of Agriculture, Siraj Hussain. Thank you all for joining us this evening. Mythili, about the retail inflation, the CPI, which has come down in July, about 0.25% lower than what we saw in June. And also about factory output. The IIP has grown by 12.3% in June. What do these numbers tell you about the state of the economy today? And do we see a declining trend on the inflation front that could possibly hold?
Well, Vikram, 1 month's data, whether on the CPI or industrial production, can't tell you very much about the state of the economy. But given that caveat, the fact is that inflation has come down below 7% after 3 consecutive months of having remained above 7%. That's the good news. But as you mentioned, it is a 7th consecutive month where inflation has remained above 6%, which is the upper end of the RBI's inflation band of 2 to 6%. So that's not the so good news. On food inflation, yes, the good news is there that we have food inflation coming down at 6.75, down from 7.56 the previous month. So that is definitely good news in a country which has a significant number below the poverty line and where food constitutes a very large proportion, almost 50% of our consumption basket. So on the inflation front, the news is good. But inflation has trended down throughout the world for the month of July because oil prices had come down. Whether oil prices will continue to soften is a big question mark because the geopolitics situation hasn't improved. In fact, we are seeing growing geopolitical tension over Taiwan. So as of now, it's a little early for us to relax our guard on inflation, which is perhaps why the Reserve Bank of India, even though it did perhaps anticipate inflation coming down, did not change its estimate. So as of now, I think the state of the economy, well, is improving is all I would say. But whether the improvement is here to stay is, as I said, up in the air. It's too early for us to say, yes, the improvement is here to stay.
Right.
Fingers crossed as we go into our 75th year.
All right. Of course, fingers are absolutely crossed and we hope for better times. Siraj Hussain, do you agree with the kind of assessment that Mythili is making, that it's perhaps too early? So we can't really take our foot off the pedal when it comes to controlling inflation. When it comes to the food basket in particular, we're seeing a month-on-month fall from June to July. Do you see the declining trend continue on the kind of monsoon we've seen so far? And if you do, how soon will it reflect in the rural economy and the kind of consumption levels we've seen over there in recent times?
I'm afraid the trajectory going forward is not going to be as optimistic as today's data shows. And the reason is that, and I'm sitting in Lucknow, I have traveled around Lucknow, and I find that the paddy crop has really been affected very badly. And, while the food security may not be under threat because rice production will be good in some other states, many other states, but I think UP, Bihar, and Bengal, 3 large rice producing states, are going to see a very handsome, hefty shortfall in production. And it is not that the government is not aware of this, and that is why today the government has imposed declaration of stock limits for tur. So going forward, I think food inflation will continue to be high.
If food inflation continues to be high and we are still circumspect, Mahantesh, when it comes to the macro data and about this decline, whether it can become a trend soon enough, considering what we're hearing from Mythili and Siraj Hussain so far, what are you seeing as far as the markets are concerned? The kind of earnings reports we've seen in the first quarter, how does that really tell you about market sentiment right now and reflection of ground realities of the kind of data that we are seeing, at least as far as the current situation is concerned? Because India, compared to the rest of the world, the kind of global slowdown that we are talking about seems to be handling it better than many other economies. Would you agree?
I think the Indian economy is coming out of the bad phases it has gone through in the past 2 years during the COVID period. And therefore, there is a clear base effect that you can see coming out in the markets. While the corporate earnings, the June quarter earnings, you would notice from moving from March to the June quarter, most corporates would have seen their margins actually contract. But the subsequent quarter, the September quarter results are likely to be better. Two effects. Again, I will talk about that base effect that will come into play for when the margin, when we talk of margins. And second effect has got to do with reducing inflation, particularly in the commodity prices. The commodity prices are something which directly impacts corporates' profitability. While these two effects are something which is now getting factored in or priced into the market, the only factor that yet remains to be resolved is how will the consumption shape up, how will the revenues itself will grow. This is where there is a bit of a question mark going forward, because we may see consumption actually slacken, although on a year-on-year basis, they will continue to grow. So between the effect of a consumption slowdown versus the positive effects of inflation coming up, the bottom line of most corporates should be better off from what we have seen so far. And therefore, the markets are really buoyant.
And we've seen that buoyancy come into the markets after a steep fall. Mythili, meanwhile, as far as inflation goes, the government has asked the RBI to maintain inflation at 4% with a margin of 2% on either side. And the government has given the RBI this 5-year period, which ends March 2026, to keep that band. Now, we're still outside the band. How big a challenge do you think it is for the government to keep growth going for the kind of inflation levels that we're at? And also the challenge to the RBI to keep the inflation in check, even as imported inflation remains a stark reality.
Well, yes, it's certainly going to be a tough call because RBI was a little late, in fact, to start tightening. But now, because inflation, the problem with inflation is that once it takes root and gets entrenched, it's really difficult to eradicate it or bring it down back within the band. So inflation will remain high, which is why we are likely to see 3 quarters. RBI also anticipates 3 quarters of inflation remaining above 6%, in which case they will have to write a letter to the government explaining what they're going to do about it. It also complicates their task because the RBI is also the government's debt manager. So when the RBI does a classic remedy for high inflation, which is raising interest rates, it increases interest cost to the government. When it increases interest cost to the government, the borrowing costs go up and the government will have that much less to invest. At a time when private sector is already still shy of investing, government investment really is the key driver for growth, which is why we're in a peculiar conundrum that anything that the RBI does to curb inflation is going to hit growth. So it's going to be a tough call. Let's see how the RBI handles it, and let's see whether growth pans out as the RBI has indicated for this year.
And Siraj Hussain, when we talk about commodity prices, they have come down a whole lot. Edible oil prices, they've seen a dip. Clearly, this is going to affect farmers. How is that, including the kind of measures that the government has put in place to control prices in general, affected the rural economy?
I think when the Kharif crop is harvested in October, November, in all likelihood, the prices will remain above MSP, especially in case of cotton. The prices are going to remain higher. Paddy prices are also going to remain higher. Tur, as I mentioned, is going to remain higher than the MSP. So wherever the farmers will be able to harvest their crops due to good rains, I think they will realize a better price. But as I mentioned, a large number of farmers in these highly populated states of UP, Bihar, Jharkhand, and West Bengal are not going to harvest a good crop or even an average crop. So the farmers' earnings will be very badly affected, and that will affect consumer spending in rural areas in these states.
Absolutely. And that is going to be a core data point that we'll have to consider when we see the growth overall, how quickly the rural economy catches up. According to you, Mahantesh, which are the sectors and the kind of companies and stocks that are likely to see the fastest recovery now in the markets against all these underlying economic reasons we are discussing, based on interest rates, the fall in commodity prices, the kind of agricultural output, and the expectations there?
I think when we look at sectors from the market perspective, it's not the India focus that you should be looking at right now. It has to be the focus out of India. So, but that's why I will single out such sectors as the IT and the on the commodity side, particularly the metals, who will start doing better. There are also two big reasons for both these sectors to do better. One is that the margin headwinds that they were facing so far are distinctly easing, and that allows them to broaden their margins, expand their margins, etc. And we also have certain policy decisions likely to affect them quite favorably, particularly on the commodity side. I think in your introductory comments, you talked about the steel export duty that is being anticipated will be withdrawn, but there could be delays. Is the comment that you made?
That's right.
But irrespective of that delay, they will drive the earnings better for the metals index. And on the IT side, it's the policy decisions led by particularly by the US government, which will shape up better for these two sectors. So I will single out these two sectors right now.
Sure.
And probably 3 months, 6 months down the line, we might have consumption coming back.
Right.
Once the festive season is over. So the consumption sector is to look forward to.
Absolutely. Interest rates, of course, Mythili, will have a large role to play after hiking the repo rate by 50 basis points to 5.4%. How do you think the MPC is going to move the rates in the remainder of the year?
Well, I think if you go by what the US and other central banks are doing across the world, nobody's lowering their guard on inflation. So interest rates will go up in India as well, but not maybe by 50 basis points. The fact is the problem really is, as I said, that monetary policy acts with a long lag. So I'm not sure how much it will really work to bring down inflation. But the fact is that if the economy is going to slow down and we do see a recession in the US, the US recession is still, one is not very sure whether the US economy is going to go into a recession because they have contradictory signals. But certainly the UK, Eurozone is heading for a recession, in which case global demand will be impacted. India's export growth contributed a great deal to the growth that we saw last year, in which case we will see a growth slowdown happening. So altogether, I think we're heading for very, very uncertain times. Inflation is likely to remain high. Growth we may not go into a recession, very unlikely, but we certainly are going to see stagnant growth. So stagflation, I think, is here to stay. And that's going to be the biggest challenge both for the RBI as well as for the government.
Well, the news is not the best at this point in time, but we're always hopeful, like we said, of better times ahead. And the country is celebrating 75 years of independence. The outlook remains hopeful, but cautiously optimistic, like many people like to say. Thank you very much for joining us with your perspective on the state of the Indian economy right now. Thank you indeed.